You did tell us that the economic survey is more conservative on growth, but in the economic survey fine print, you have said that the private sector investment is still very cautious. What are the key reasons for it? That's number one. And secondly, while you've put out an estimate for 8 million jobs that will be needed in the non-farm sector, if private sector investment continues to be weak, how do you expect these jobs to be created in the economy?
I did not say the private sector investment is weak. On the contrary, my slide showed that private sector capital formation has picked up in the last 3 years. In fact, I specifically mentioned that investment in machinery and equipment and intellectual property products have recovered more in the last 2 years, or in line with the growth in public sector capital formation. I said that private sector it's a risk factor. It is not a baseline scenario. It is a risk factor. That if seeing the excess capacity in China and seeing the way the global environment is evolving, if the private sector were to turn cautious, and by the way, when it turns cautious, it doesn't mean that there is an absolute decline in capital formation, but the growth rate may slow. In fact, one of the slides we showed, the private sector capital formation on the basis of the data available from a small sample of 3,000 plus companies grew by 20% in FY24, 19.8%. Now, in FY25, it grows by 12% or 15%, let's say, for example. You might say that the growth rate has slowed down. We are not saying that the private sector capital formation will not expand.
So, in the second question, jobs.
What is the question?
The fact that 8 million jobs need to be created in the non-farm sector. Which are the areas that you're looking at where these kind of jobs will be created? Also, if only 50% of the graduates are employable, how big a risk do you think will it be for the new jobs and, of course, the kind of skill sets that the kids will need to have?
So, we mentioned in our survey, the chapter 8 also, all the steps that government is taking towards generation of employment. However, as CA has also in his presentation mentioned, that the private sector needs to do its bit in the middle to get the employment to the level that would be required for the increasing workforce. Also in the chapter you would like to go through, you will see that we've suggested 2 important areas for further taking up, like the care economy and the agro-processing sector as some examples, which anyways government is taking a lot of steps and which with the help of the private sector can further be strengthened. That's all.
Thank you. One more correction to your point. We said 33% was in 2014. Now it is 51.3% in the employability. No, but given the size, the base, 51.3% is a very substantial number in India. That way, the base effect is actually working in India's favor.
Thank you. 124.
Sir, Timsi Jaipuria from CNBC TV 18. 2 key questions here. One on AI. You have said that AI is going to take away a lot of jobs, but the corporate sector, the private sector has to be a little mindful because it is going to impact both their top line and bottom lines if they do not work on the labor force and the employment and the labor force incomes. Apart from that, would you like to elaborate on that? What sort of challenges or threats are you seeing and what you want the corporate sector to be mindful of in terms of when they work on this? Also, apart from this, you said deregulation of policies. Policies are leading to a lot of burden for the corporate sector and the private sector, and especially SMEs. The burden is increasing and that is creating a lot of issues. Though that has lightened is what you said in your preface also, that the burden has lightened over the years, but yes, it is still quite high. So what do you mean about that?
Before I answer both your questions, I want to correct 2 impressions that came out in your question. I didn't say AI will take away a lot of jobs. I simply don't know. I didn't say that. I said it is possible that jobs related to business process outsourcing in the short run may be under threat, whereas AI might actually turn out to be a job booster and a complement to labor in higher skilled jobs. I said the impact of AI on employment across the world is barely understood. So it is very early days to talk about lot of jobs will be lost or too little jobs will be lost. Nobody knows, but we need to be mindful of the possibilities, and we need to make sure that as we deploy AI, we also prepare the population to be able to participate in it by redesigning curriculum, by creating in-house courses, etc., to make them AI employable and AI compatible. So the reference to lots of jobs was not there in my presentation. And secondly, when I talked about deregulation, I didn't say about the private corporate sector. I spoke about the MSME sector much more. The private corporate sector, by all accounts, based on profitability data, is doing very well. And they have one of the lowest tax rates also among the world. So important from the point of view of boosting manufacturing and creating a Mittelstand, the spine or the vertebrae of the economy, which is basically the small and medium enterprises, and that is where deregulation will have a much bigger bang for the buck. And we have given some examples in the presentation and also in the survey. But ultimately, it is an area which predominantly, not fully, predominantly lies with the state governments, and they have to look at their respective statutes, rules, regulations, inspection and compliances to be able to unshackle the productive sectors.
Sir, just a small addition. If you can explain on the household savings, that how household savings are not dipping, but they are actually moving towards higher yielding areas. That's what also you mentioned.
No, I think in the interest of time, we will probably move on to other questions, because I have written about it in an article in Mint, for example, on the 29th of April in great detail.
Sir, I'm Monica from the New Indian Express. Am I audible? Yeah. Sir, most economists, they are of the view that the government needs to revisit the inflation targeting regime, because they think that the 4% target is quite high, and because of that, the borrowing costs are quite high. So, can you please share your thoughts on this?
On the 4%?
Yeah, they think that the 4% target should be increased to 6%, so that the borrowing costs, they come down, and the interest rates become lower and can benefit common people and also investors.
It should be the other way around. It should be the other way around, isn't it? Yeah, we actually create even I think we seem to be having some difficulty in understanding the very premise of your question. If the inflation target were to be, say, increased to 6, then the real rate being around 1%, then the nominal rates have to be at 7.
Sir, actually, they say that in a bid to push inflation lower, so they keep the interest rates high. So this is the logic they are giving. And they are also saying that there is a need to, consider both WPI and CPI while setting the inflation target. So if you could give some clarity on this.
I think probably this is a question better addressed at a Mint Street press conference in Mumbai.
Thank you. 126 पीछे जाइए. हाँ.
सर मैं लक्ष्मण हूँ CNBC आवाज से. कैपिटल मार्केट को लेके इकोनॉमिक सर्वे में कहा गया है कि द सिग्निफिकेंट इंक्रीज इन रिटेल इन्वेस्टर्स इन द स्टॉक मार्केट कॉल्स फॉर केयरफुल कंसिडरेशन. मेरा क्वेश्चन ये है कि इक्विटी मार्केट के रेगुलेटर या फिर फाइनेंस मिनिस्ट्री से इकोनॉमिक एडवाइजर का क्या सजेशन है, किस तरह का रिकमेंडेशन है इस कैपिटल मार्केट में जो रिटेल इन्वेस्टर्स का पार्टिसिपेशन बढ़ रहा है उसे?
So there is no problem with the participation of retail investors in the capital market. It is a very healthy thing. It has actually created a very good buffer for Indian markets in general, given an additional saving option or additional deployment of savings for our households in the last 4 years. So capital market participation by retail investors is a very healthy and a very welcome thing. The issue is in what kind of capital market participation that they are engaging in. Speculative trading in futures and options is something that I have commented upon earlier, and that's exactly the point that we are driving at, because they are not exactly benefiting either the households or the purpose of capital formation in the overall economy.
71, please.
So Meghna Mittal from Money Control. You said that because in view of the current challenges that are there in the global environment space, a lot of heavy lifting will have to be done on the domestic front in terms of growth. But do you also think that especially in agri growth and in the rural consumption, that can pose a significant challenge, especially because the monsoon has also not progressed the way the IMD had predicted?
So what was the question? Was it a statement?
So I'm asking that on the because a lot of heavy lifting will have to be done on the domestic front, rural consumption and agri growth, can they pose a significant risk to the global to the domestic front as well?
So the chapter on agriculture and food management, which is I think chapter 6, talks in detail about the measures that have been taken by the government to basically keep the agriculture sector growing. The public investment has increased over time in agriculture, and and you also see substantial subsidies and policies that are generally pushing the farmers, the agriculturalists, to move towards areas that will generate higher incomes, like the animal husbandry or fisheries and other allied sectors. I think in that sense, the government is cognizant that agriculture sector needs to be and is the mainstay of the economy, with a large proportion of the people employed there. And it is taking measures, and therefore the focus is on that across all the subsectors within agriculture. If you look through the chapter, there's a detailed discussion about the policies, about the reason why those policies are being implemented, and their economic rationale. So if you go through it, I urge you to go through it, and you will have your answer. Thank you.
265, please.
Hi, good afternoon, sir. I'm Kriti from Informist Media. So we saw a common thread running through each of the chapter was expansion of data collection and better statistical system. You mentioned that there's a need to update the IIP. There's a need for state variant of similar indices. So what would be the roadmap for that? And is there a timeline for each of these stepping stone for overall system overhaul of the statistical system? And second, just one more question. You mentioned that despite good credit rating, India's sovereign green bonds have not garnered the kind of greenium you would have expected. So what do you think led to that, and how that could be fixed, and so that it is more attractive for the private players? Thank you.
Sorry. On the first question on the statistical systems, all I can say is that the work is underway on all those aspects, and soon you will see these things becoming a reality in terms of newer indices with newer weights and newer components, etc. That is, work is very much underway at a brisk pace. By the way, the greenium issue is not peculiar to India. The greenium issue is an issue that plagues, and Chandini can correct me if I'm wrong, all green bond issuances across the world. It is not that there is something lacking in India's offering. In fact, we have a very high green rating. And therefore, it is about the private capital across the world and in India being willing to walk its talk on saying that we are interested in investing in green projects. It is not that India is missing something. Please.
And I just want to add here that the greenium for India has not been that low. In fact, it is fairly of the same order that you will find elsewhere as well. I think it was the initial year, this is one of the first issues. We've just had it in 22-23, and then last year in December and November, December, and I think as we progress, this would improve. Our the sovereign green bond in fact, has been rated medium green by Cicero, which is considered to be very good. It's a very robust evaluation of the framework that we have in place, and we've delineated various activities that we consider green. We are going to come out with a post-utilization analysis. So it's a fairly robust framework we have, and I think it is only going to improve as we move forward.
Thank you. 266.
Sir, I am Banikinkar Patnaik from the Economic Times. Sir, this survey seems to have rooted for targeting inflation without food. While you have a point there are counter views also. Some people say that with more than 40% of the CPI outside any targeting framework, can it really be called an inflation targeting framework? Also, there are, views that large and persistent food shocks can spill over to non-food segment also. So, sir, how would you respond to these concerns?
I would say that these are very fair questions. But more importantly, as the box item also explains, ultimately, if you look at monetary policy, it is a short-run macro aggregate demand management tool. It is not a tool to manage aggregate supply shock. And food shocks are predominantly supply shocks. So it is a tool that is not designed to address that. And also it is in a way it's a bit unfair to burden a central bank with controlling the inflation when it contains a component that it is not under its control. So if I am given a target over which I have no control, if I were in the private sector, I would actually be talking to my management and saying that I can't do anything about it. Then it requires somebody else to pitch in, and they may or may not pitch in. And somebody else also has other considerations and stakeholders to consider. So in that sense, what the survey has done is to put this idea on the table. And by the way, several countries, when they were targeting inflation, this debate came up. Should they target headline or core inflation? Ultimately, because food and energy are mostly supply shocks. So this issue is not peculiar to India. And secondly, as we grow, as we become $7 trillion, $10 trillion economy, the share of food will come down. At that time, then the distinction between headline inflation and core inflation will disappear. So even in developed countries, despite the fact that food and energy shocks were relatively smaller in terms of weights, even there, this discussion has been very rife about what is the appropriate inflation metric to target. So for a large developing economy with a huge share of food item, even though it has come down over the years, it is a very relevant question to raise.
277.
Hello, sir. Ruchika this side from Business Standard. Very interesting survey. One of the things that the survey talks about is that tax policies will play a critical role to tackle inequality. So does it mean that, are you suggesting we should have higher tax on rich or some sort of a surcharge on super rich? And the second thing, if you can please explain what the survey means when it says that financial sector needs to support the banking sector. You've also talked about how India can ill afford over-financialization. What do you mean by over-financialization? Thank you.
So the first point about the tax policy can play an important role in handling inequality. Is that right? Yeah, I mean, this is something that is widely debated. We have a progressive rate of taxes in both direct and indirect taxes, and that is what we mentioned. And ultimately, it also has implications over how we tax income versus how we income from labor and how we tax income from capital, etc. So that is those are the underlying questions behind that statement, underlying angles behind that statement. On over-financialization is exactly what I mentioned in the response to an earlier question, is that when the pace of financialization of the economy or financial innovations in the capital markets is running faster than economic development, usually, and the Asian financial crisis is a classic example of that, usually it runs into trouble. So the introduction of derivative products, single stock futures, single stock, these are all things that for a country of this per capita income size obviously is a very good financial innovation, but probably a little bit too early from the point of view of what it means for the underlying savings habits and channeling those savings into capital formation. So my response to an earlier question about F&O is exactly the example of the over-financialization we talked about.
We will take last two questions. 280 पीछे दीजिए.
Sir, Tarun from Z Business. Sir, first of all, sir, very innovative, very creative report, sir. Sir, you mentioned about the CSR things, sir. Sir, what you want to say in this report, sir, because you mentioned the corporate has the more responsibility towards the CSR. Secondly, sir, the food inflation part, sir, do you think it's a big risk because we have seen in the past about the tomato prices, potato prices and onion prices. Do you think it is a major concern, especially for the food inflation side, sir?
I'll come back to it.
On the food inflation, the last year was an year of administrative interventions. Now, food inflation has some structural component in it. We have a shortage, continuing shortage of pulses. And there is some administrative component in it because MSP, we want to give remunerative prices to the farmers. Hence, MSP is fixed at a reasonably high level. So that becomes a kind of a benchmark for retail prices. And that's compensated with subsidized food grains for the poor. More than 80 crores of people are given subsidized food grains. Now, on the food inflation, now there is a transient component, there is a structural component, and there is an administrative component. All these three components can be addressed in the short term with administrative actions. You might remember when the tomato prices rose highly, and the government started procuring from the surplus regions and distributed it in the deficit regions, and that kind of cooled the tomato prices. Likewise, when onion prices were showing signs of increasing, the buffer stock norm was raised, then the Bharat Dal, Bharat Atta, Bharat Rice. So these administrative interventions have been quite successful to our understanding and analysis, and so hence the flare-ups may happen, but there won't be prolonged food inflation.
271, please.
No, before that, sorry, he had another question on the private sector. So in one of the last few slides where I showed the tripartite compact, on the left side I had mentioned very clearly some of the things that we expect the private sector to do. So this survey, as I've been mentioning repeatedly in the course of my presentation, is about delineating the fact that we need a lot of detailed ground level granular actions, which I simplified into the word grunt work. There is a lot of grunt work. But the grunt work, usually people immediately turn to the government and say what the government should do. I'm saying there is action required on the part of the government at the center, government in the states, local governments, and more importantly the private sector as well. Because that is where the action is in terms of job creation. Governments are responsible for facilitating them by deregulation, by making it easier. For example, we gave the example of the restrictions on women being employed in several sectors, between day and night shifts, etc., land use restrictions. Those are all the ways in which the governments can help. But the private sector on its part, obviously, investing in R&D, collaborating with academia on skilling and education, and also making sure that it is aware from its own self-interest angle of the medium-term implications of striking the right balance between deployment of capital and deployment of labor. So those action points required of them were very clearly identified and listed in the presentation and in the survey as well.
So, Sir Karishma this side from Business Today. Congratulations to you and your team. I'd like to understand on the China Plus One strategy. This survey mentions that it is going to be more effective to have Chinese companies invest in India, and then India in turn exports these products to the market. Sir, if I'm understanding right, are you relooking at the China Plus One strategy, and how viable is this for India on a geopolitical front?
So I'm not re-looking at it. I'm asking for a re-examination. I'm saying that, I spent quite a bit of time on it in the presentation as well. I simply said there is a balance that's required between importing goods versus importing capital. That is all there is to it. And I gave the example of what Brazil and Turkey did. They banned the import of vehicles, but then they incentivized them investing in their own country. So because if you continue to import, your trade balance will keep widening. We have a large trade imbalance with them. And then it also means you are making yourself vulnerable. Whereas if you choose the areas in which you can have investments inside the country, then you also have a chance of Indian entrepreneurs picking up the know-how and at one point also becoming self-sufficient. So it's a question of choosing the right balance between import from a trade route and importing capital from the capital markets route.